Yes, hello friends and investors. This is Amon Ray and welcome back to my channel, Cebu Bohol Homes. And for today's episode of Home Guide, this is going to be literally a home guide. A guide for first-time home buyers, especially now that the quarantine season is on for the coronavirus pandemic. It's good to have your own home where you can plant and where you can be secure in your own private space. So this is going to be tips for first-time home buyers. This is from nerdwallet.com. So I'm following an article for this particular episode of Home Guide. In here, we'll learn strategies for saving a down payment, applying for a mortgage, house shopping, and more. So buying a home can be nerve-wracking, especially if you're a first-time home um, buyer. Yeah. So I've experienced buying a house, but if you haven't had any experience since it's your first time to buy a house, this will be helpful to you. Yes, these tips will help you navigate the process, save money, and avoid common mistakes. And we have here organized them into four categories. First, mortgage down payment tips. Second, mortgage application tips. Third, house shopping tips, the house tour. And fourth is the first time homebuyer mistakes to avoid. Let's go into the mortgage down payment tips. Basically, what's a mortgage? Sometimes it's going to be a difficult term for, especially for, people who are not yet familiar with home buying and with real estate. So basically, it's called real estate. It's part of real estate. Buying a house and you know securing a loan. So mortgage is basically the loan that you get from a financial institution to finance your house purchase or the purchase of your house. So let's start with the first tip under mortgage down payment tips. Start saving for a down payment early. So basically, there's called so I'll just try to simplify this one. For example, if you're buying a 1 million house in pesos, so there's the down payment and the balance. Basically, if you're not paying cash, so there's the 20% down payment. This is standard in the Philippines, and 80% for the financing. It's through a loan from a bank. In the Philippines, normally the very common is the bank financing for your balance, or you can also for if you are a Pag-ibig member, you can go for Pag-ibig, and there's also a developer's financing. You are financed by the developer of the project. So yeah, it's common. You have to start saving for a down payment early, and it's common to put 20% down. But I'm sorry about the dog. It's barking at the moment. Anyway, but many lenders now permit much less, and first-time homebuyer programs allow as little as 3% down payment. That's pretty rare in the Philippines, but maybe in other countries like the US, it's allowed. But putting down less than 20% may mean higher costs and paying for mortgage insurance. So if lower the down payment is lower, of course you'll be paying more monthly payments for the balance. And even a small down payment can still be hefty. For example, 5% down payment on a 200,000 US dollar home is 10,000. So 200,000 USD is like 10 million pesos cost of the house. So you'll be asked to put up 10,000 USD. So that's about 500,000 pesos. So that's about 5% down payment. So play around with this down payment calculator to help you land on a goal amount. Some tips of saving for a down payment include setting aside tax refunds and work bonuses, setting up an automatic savings plan, and using an app to track your progress. So regarding tax refunds, and it's not really common in the Philippines. Well, when you fill out an income tax form every year, there's actually an excess. There's an area there where your excess taxes are calculated. But I'm not I'm not familiar about getting tax refunds. It's not really common, but maybe yeah, for government officials, yeah, tax refund is just I think it's credit to the next payroll. I think I'm not sure, but for business people, I'm not really familiar about tax refunds in the Philippines. But for work bonuses. So it means your 13-month pay, you can set it aside for the down payment of your house. The number two, second tip, explore your down payment and mortgage options. There are lots of mortgage options out there, each with its own combination of pros and cons. So you can weigh the positive, the advantages and disadvantages. That's the pros and cons. If you're struggling to come up with a down payment, check out these loans. Conventional mortgages. They conform to standards set by the government-sponsored entities Fannie Mae and Freddie Mac and require as little as 3% down payment. FHA loans, loans insured by the Federal Housing Administration, permit down payment as low as 3.5%. VA loans, loans guaranteed by the Department of Veteran Affairs, sometimes require no down payment at all. Actually, in the Philippines setting, um, if you go for bank financing, 20% down payment is the standard, even pag-ibig and or the HDMF. So um, it also depends on your paying capacity or your salary. So if the bank finds you to have, to be earning more, so they may require you with a less down payment as an offer. Then making higher down payment will mean having a lower, more monthly mortgage payments. So that's better if you want to pay lower monthly amortization. So you can go for higher down payment if you were able to save up for your down payment of your house purchase. If you want the smallest mortgage payment possible, opt for a 30-year fixed mortgage. But if you can afford larger monthly payments, you can get a lower interest rate with 20-year or 15-year fixed loan. So actually, when you go for a bank loan, you can opt to choose like a fixed interest rate for, like, for example, if you chose 30 years in the Philippines is very long. Most banks offer a maximum of 20 years to pay up your loan with them, your mortgage. And you can opt to have a fixed interest rate for the whole 20-year term of the loan, or which can be higher if you compare it to choosing adjust adjusted rate for every 5 years. So there's a fixed 5-year interest rate, which is lower, a bit lower, but it will somehow increase or decrease, depends on the market condition or market situation after the 5-year term. So it can be risky as well, because your interest rate might increase if inflation is higher on after 5 years. So you can use some calculators to determine whether a 15-year or 30-year fixed mortgage is a better fit for you. Or you may prefer an adjustable rate mortgage, which is riskier but guarantees a low interest rate for the first few years of your mortgage. Then, third tip, research state and local assistance programs. In addition to federal programs, many states offer assistance programs for first time home buyers with perks such as down payment assistance, closing costs assistance, tax credits, and discounted interest rates. Your county or municipality may also have first-time home buyer programs. In the Philippines, I think depends with there are also companies where you work for or work with. They offer assistance for its employees who are buying their first house. Then number four, mortgage application tips. Fourth tip. So this is under the mortgage application tip. Determine how much money you can afford. Before you start looking for your dream home, you need to know what's actually within your price range. Use this home affordable calculator to determine how much you can safely afford to spend. Yes, of course. Um, um, it's too risky to go over budget, to go over your price range, because you'll be paying, you know, more than what you can actually afford. Then tip number five, check your credit and pause any new activity. When applying for a mortgage loan, your credit will be one of the key factors in whether you're approved, which is true in the Philippines. And it will help determine your interest rate and possibly the loan terms. Especially for banks, they're very strict in approving housing loans. But with Pag-ibig, it's more lenient because, of course, Pag-ibig is there to help people get a house, because you know, it's a government project. So check your credit before you begin the home buying process. Dispute any errors that could be dragging down your credit. and uh, s- your credits dragging down your credit score and look for opportunities to improve your credit, such as making a dent in any outstanding debt. So credit check is very popular in the US, in the Philippines as well. When you apply for a bank loan, actually, all banks in the Philippines has this kind of system where they can actually choose. They can actually know your credit score, credit rating, if you have, uh, defaults in any of the banks in the Philippines, so they can actually check that. So when you apply for a housing loan with banks in the Philippines, they will know if you have defaults in the past. So to keep your score from dipping after you apply for a mortgage, avoid opening any new credit accounts like a credit card or auto loan until your home loan closes. Then tip number six, compare mortgage rates. So this refers to interest rates offered by banks, because there are several banks, of course. They have housing loan programs. Many home buyers get a rate quote from only one lender, but this often leaves money on the table. Comparing mortgage rates from at least three lenders can save you more than 3,500 US dollars. So that's a lot. That's about 150,000 pesos over the first 5 years of your loan, according to the Consumer Financial Protection Bureau. Get at least three quotes and compare both rates and fees. As you're comparing quotes, ask whether any of the lenders would allow you to buy discount points, which means you'd prepay interest up front to secure a lower interest rate on your loan. How long you plan to stay in the home and whether you have money on hand to purchase the points are two key factors determining whether buying points makes sense. Yes, you can use this calculator to decide whether it makes sense to buy points. There are online calculators actually that could help you as well. So you can decide how much you can set aside for these. Tip number seven, get a pre-approval letter. For me, this is very important if you are buying a house first time. You can get pre-qualified for a mortgage or a housing loan, which simply gives you an estimate of how much a lender may be willing to lend based on your income and debts. But as you get closer to buying a home, it's smart to get a pre-approval where the lender thoroughly examines your finances and confirms in writing how much it's willing to lend you and under what terms. Having a pre approval letter in hand makes you look much more serious to a seller and can give you an upper hand over buyers who haven't taken this step. So, in the Philippines, for example, with say Camellia Homes or Primary Homes, before they let you move into your house after paying the down payment, they will require you to have a pre approval letter from the bank to make sure that your balance for the price of the house is paid up by the bank. So it's going to be the bank who will pay the balance of the total contract price. And once you have the pre-approval letter, they will let you move into the house. Tip number eight, under house shopping tips, hire the right buyer's broker. So you'll be working closely with the real estate broker, so it's essential that you find someone you get along with well. So to my friends out there, so can definitely contact me if you're buying a house sooner. The right buyer's broker should be highly skilled, motivated, and knowledgeable about the area. So it's important to have a knowledgeable broker to handle your real estate deals. So at least we can compare the prices and get the best interest rates from the bank. So tip number nine, pick the right type of house and neighborhood. For me, this is very important if you really intend to live in a house. So picking the right house and the right neighborhood is very important. You may assume you'll buy a single family home, and that could be ideal if you want a big yard or a lot of room. But if you're willing to sacrifice space for less maintenance and extra amenities, and you don't mind paying a homeowner's association fee, a condo or townhouse could be a better fit. But even if the home is right, the neighborhood could be all wrong. So be sure to first research nearby schools, even if you don't have kids, since they affect home value. So accessibility to schools if you have kids is very important. Look at local safety and crime statistics. If it's safe to be living in that kind of subdivision or condo, is it not near some controversial areas or areas with high crime rates? Then map the nearest hospital, pharmacy, grocery store, and other amenities you'll use for convenience. And number four, drive through the neighborhood on various days and at different times to check out traffic, noise, and activity levels. But of course, if you're in the city, traffic is like common, very common. It's normal in the city to experience traffic. Number 10, tip number 10, stick to your budget. Look at properties that cost less than the amount you were approved for. Although you can technically afford your pre-approval amount, it's the ceiling, and it doesn't account for the other monthly expenses or problems like a broken dishwasher that arise during home ownership, especially right after you buy. And take note that if you are living in a subdivision or condominium, there's a monthly fee. For condos, it's a monthly dues for condominiums, which will take care the maintenance of the condo and for securities and other amenities. And for subdivision, same. There's a homeowner association dues that you have to pay as well. Shopping with a firm budget in mind will also help when it comes time to make an offer. In a competitive real estate market with limited inventory, it's like you'll bid on houses that get multiple offers. So it's like a seller's market. And when you find a home you love, it's tempted to make a high priced offer that's sure to win. Of course, you'll bid high so you'll get the house. But don't let your emotions take over. Shopping below your pre-approval amount creates some wiggle room for bidding. Stick to your budget to avoid a mortgage payment you can't afford. Like for example, if your budget is let's say 1 million, if you're in the Philippine setting. So actually we don't normally bid if you're going for a subdivision. There's a lot of inventories, mostly especially if the subdivision is just new. But some countries like the US, you need to bid for that one. So if your budget is one m, you should look for a house like say 800,000, so you can bid for like 900, 950. So don't go beyond the ceiling. And tip number 11, make the most of open houses. So an open house is like, the house is shown to prospective buyers. So it's called an open house. So you can freely visit a house and check its features, the rooms, available rooms, the space, and also the amenities. So that's an open house. When you're touring homes during open houses, pay close attention to the home's overall condition and be aware of any smells, stains, or items in disrepair. But if you're buying a house, before you move in, there's like a checklist that you need to fill out. So you can report it to the developer, so they will have to fix it before you finally move in. Ask a lot of questions about a home, such as when it was built, when items were last replaced, and how old key systems like the air conditioning and the heating are. If other potential buyers are viewing the home at the same time as you, don't hesitate to schedule a second or third visit to get a closer look and ask questions privately. Have a tete-a-tete. First-time home buyer mistakes to avoid. With so much to think about, it's unsurprising that some first-time home buyers make mistakes they later regret. Here are a few of the most common pitfalls, along with tips to help you avoid a similar fate. Tip number 12, not budgeting for closing costs. In addition to saving for a down payment, you'll need to budget for the money required to close your mortgage, which can be significant. Closing costs generally run between 2% and 5% of your loan amount. So it's based on the loan amount or how much you'll have to take out from the bank to pay the balance of your house. You can shop around and compare prices for certain closing expenses, such as homeowners insurance, home inspections, and title searches. And actually, some banks have high closing fees, so you have to check the bank that offers very minimal closing fees. You have to check with your broker. You can also defray costs by asking the seller to pay for a portion of your closing costs or negotiating a real estate agent's commission. Calculate your expected closing costs to help you set your budget. Tip number 13, not saving enough for after move-in expenses. Once you've saved for your down payment and budgeted for closing costs, you should also set aside a buffer to pay for what will go inside the house. This includes furnishings, appliances, rugs, updated fixtures, new paint, and any improvements you may want to make after moving in. So especially if you're getting a bare house, there's no furnitures, no tiles, even no partitions sometimes. So that's a bare unit. You need to also take into account after move-in expenses. That's for the buyer's account. Tip number 14, buying a home for today instead of tomorrow. It's easy to look at properties that meet your current needs. But if you plan to start or expand your family, it may be preferable to buy a larger home now that you can grow into. Consider future needs and wants and whether the home you're considering will suit them. Tip number 15, passing up the chance to negotiate. A lot can be up for negotiation in home buying process, which can result in major savings. Are there any major repairs you can get the seller to cover either by fully handling them or by giving you a credit adjustment at closing? Is the seller willing to pay for any of the closing costs if you're in a buyer's market? So there's a lot of sellers or the houses for sale, especially now that there's a crisis. For sure, there's a lot of properties out there which is for sale at a discounted rate. You may find the seller will bargain with you to get the house off the market. Tip number 16, not knowing the limits of a home inspection. After your offer is accepted, you'll pay for a home inspection to examine the property's condition inside and out, but the results will only tell you so much. Not all inspections test for things like radon, mold, or pests, so be sure you know what's included. Make sure the inspector can access every part of the home, such as the roof and any crawl spaces. Attend the inspection and pay close attention. Don't be afraid to ask your inspector to take a look or a closer look at something and ask questions. No inspector will answer the question, should I buy this house? So it's for you to decide, it's not the inspector. So you'll have to make this decision after reviewing the reports and seeing what the seller is willing to fix. And finally, tip number 17, not buying adequate homeowners insurance, which is very important. For every businessman, insurance is important. For house, for anything that you buy, for any investment that you have, insurance plays a major role. Before you close on your new house, your lender will require you to buy homeowners insurance. Yes, it's required for banks, for big. You need to have insurance, mortgage insurance, and house insurance. The redemption insurance is different from the house insurance. The MRI is insurance to your loan if ever you can't pay it. So the insurance company will pay the rest of your loan. That's for the mortgage redemption insurance or MRI. Then for the house insurance, it will cover for in case there's a fire or flood, will destroy the physical house. So that kind of insurance will answer to that. Shop around and compare insurance rates to find the best price. So you can go for your insurance broker. You can find your insurance broker to check this for you. Then look closely at what's covered in the policies. Going with a less expensive policy usually means fewer protections and more out-of-pocket expenses if you file a claim. Also, flood damage isn't covered by homeowners insurance. So if your new home is in flood-prone area, you may need to buy separate flood insurance. But in the Philippines, you can go for the best insurance company, which will cover everything. That's comprehensive insurance. So acts of nature will be included, like flood, earthquake, and all. So yes, description of this video, I'll put links and some pages that you can check as well to where to get best insurance in the Philippines. So there you have it, a first-time buyer. It's very important to consider the steps. We had this. We had them. We had these. We have these 17 tips that you can also take into account buying your first house. I know it's nerve-wracking. Yes, it's sometimes a very important decision in your life to have your house if you intend to really live there with your family. So make the wise decision and get the best broker in town to get your first house. So once again, this is Amon Ray, real estate broker and appraiser in the Philippines. Thank you for checking this video, and I hope you learned something from our topic for today. Till the next one, bye-bye.